Hey everybody, it's Mark Yegge. Welcome to another weekly stock market update. Just got off a wonderful call with my mastermind group on a short week. So not a lot going on this week, but nonetheless, I think it was a week to kind of shake some stuff out, in low volume. So I don't know how much it counts or doesn't count, but there's some interesting stuff going on in the market. Let me show you what I'm talking about over here. And we'll just take you right into it. And let's see, get to my screen. All right, so we've got 4 green lights on the market. So we just turned green this week. So all systems are go. Time to buy something if you haven't already this week. That's what I say. You might be different, and this is for information and education, not stock recommendation purposes. But in any case, we have a rule that when the market turns green, we got to buy something or add something. So it really helps keep you disciplined. There's a gap that happened this week. The market gapped up, and then we went and filled most of that gap today. Gaps get filled, and this is no different, and that's on the NASDAQ. So you see there's a little gap that got filled, or mostly got filled. There might be a little bit left in it. We'll see what happens. Market's green, though, so even gaps that get filled on the downside are probably not going to be crushing like they were last year in the bear market. You'll notice the same thing on the S&P 500, but you'll also notice another gap from about 4 weeks ago at just above the $4,200 level. See that second blue arrow down there? So that when we start to get a lousy market, like a red or yellow market, is in play. It wants to get filled. It will get filled. Who knows when it'll happen? Maybe it'll happen on the next red market. We'll see. The Dow Jones Industrial kind of came down and kept coming down. It wants to go test the 50-day moving average. I suspect it'll do it maybe Monday or Tuesday. We shall see. If it doesn't do it today, I don't think it's going to do it today. But the Dow wants to go test that red line, that 50-day moving average, where you see that arrow. And the New York Stock Exchange Composite is below the 10-day moving average and is not holding it. And so it may want to go down and test that 50-day moving average too. It's right about the 21-day moving average today and hanging on to that. The volatility index, which is a mean reversion index, it reverted to that 50-day mean. And now it's back down on the negative side. So as soon as it's below the 50-day moving average, if it continues that trend, that means more money is coming into the market. It's the panic index, right? So the panic is low, people are putting money in the market. Kind of cool. Get to see how it looks on a chart. And then I thought this was interesting. You'll notice the top 10 groups of the market, and 30%, it's like 32% of a stock's performance comes from the direction of its sector or if it's industry. Here are the top 10 industry groups shown this week. Notice how 6 or 7 out of 10 of them are in the computer space. And if you're in Apple, like if a lot of our people are in it, you're feeling that, right? We've had a beautiful uptrend for a long time in Apple, and those industry groups are propelling it higher. Apple's a hardware and peripheral builder, and so they're the #1 group, and they've been in that #1 group for a while, and so are the other stocks. They're all kind of cranking up. Remember, the stocks do what the sector does. The sector usually, if the sector performs, most of the stocks in the sector, at least the strongest ones, perform as well. So I thought that was interesting. You're looking at 6 or 7 of the top groups in there being in the computer. That's telling you there's something going on in that computer business. It's kind of the opposite of what was going on last year, where all these computer and internet stocks just got tanked. Now they're all coming back, and so they're all the big performers. Not much else for me. Maybe I can give you one more thing. I'll just show you. This is Tesla. We had a gap up 4 days ago. It's consolidating a little bit. Tesla is in a bull run right now, and I don't think it's stopping. I think it's taking a breather, but I don't think the breather is going to be very long. I think, at least for me, I like Tesla. I also like Apple. I think Apple is one of those stocks. If you look at this chart, it's like a textbook stock with a beautiful Fibonacci extension going on. And Apple is strong, and you can see it's in a strong group. So, just a couple of tidbits for you. I hope you enjoyed that weekly market update. Have a great weekend, everybody, and I hope to see you next week on the next Stock Market Weekly Update. Take care. Bye.